This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
This is Dan Max at eXp Realty, aka the trading agent. We're going back to basic series, and today we're going to do trend lines. Something that seems simple, but how do you draw them? Why do they matter? And what do you use them for? So I like to tell people trend lines are objective lines that you use to see how the market is acting, and as a way station for what's going to happen next. You can draw them obviously ascending and descending, all sorts of different directions. But let's go through a few of the ways I use trend lines and why they're important. I'm going to roll through a bunch of stocks and kind of show you what I'm thinking. Here's an ascending trend line that I would consider almost a channel top. So channels, trend lines, same thing basically. So when you're looking at this, and now you've seen it form here and here, you can draw it to project it here. Well, XOP, it's really simple. This trend line is acting as resistance. It's an ascending resistance ray for the most part. And how do you use it? Well, it makes it so that you have a binary decision. You can short it if it fails, and it should continue much higher if it goes over it. That's all you really need to know. And in this Back to Basics series, I really want people to understand that the basics fundamentals are killer. You don't need to know everything about everything. You just need to know there's repeating formations, repeating patterns throughout the market, whether it's on short time frames or long time frames. Longer time frames are more powerful, shorter, just depends on how long you've been basing or acting or congesting or whatever you want to call the preceding action before the trend line. So here's an example of one that I would use as an ascending channel top, and you could short the XOP here, but you could also buy it long. It really creates the stop go lines for a lot of trades and a lot of things. Let's go to gold. We talked about gold for a long time. This big thick black trend line was saying that you should use this. Now that it hit there and there, you can assume, okay, boom, it hits it there, and now we start chopping around it. And here's an example where a trend line might not be perfect, but you still can watch it, still use it as a reference. You notice how we looked above it, looked below it, and now we're over it. How important is that particular trend line? Maybe not as important as, say, something like this. So roadblocks, I've been hammering people for a while just to keep an eye on this name, wait for it to break the downtrend. You had it here, it projected to here. One of the things that you can say about this particular downtrend is that every time we got up towards it, we backed off. And you can keep it for what it is. Did we, close above it? Sorry. Every time? No. That was the key. You wanted to really continue and close above it. Well, now after hours, the earnings came out and it's broken this trend line. Well, this whole congestion period, now everybody's wrong who sold, and it's up near 100. Let's go confirm that. 99.90, so 10 cents away from 100. Not a bad guess. But that's a trend line you would wait for to break and to go. And if you were trading this and you had, a buy signal, you could have bought this after hours, and you could have waited for the earnings, and you could have put a buy limit order above a certain price if it triggers. I know that's not typical what you think for buys near lows, but no, you play the breakout. Here's another example. We've been going over this for the last couple days. Apple, it's got this descending trend line. When it breaks, it should invalidate a head and shoulders. Wait for the trend line to break. That's all you really have to do. And that point in which it does, the probabilities are in your favor. Gold example was sometimes it's not perfect. Then there's other times where it's very obvious. So keep that in mind. When you see trend lines, you try to create them. You kind of look at extreme lows and you connect them. And if you notice that there's multiple points, the more powerful that trend line is. You see how I just draw that real quick? I can see this angle might coincide with these bottoms. Well, boom, that's all you got to do. Now, when you come to other stocks and you want to trade them and look at them, just remember a two-point trend line is never going to be as powerful as 3, 4, 5, and 6. That kind of stuff matters. And we'll go back to gold for, say, a trend line, but more of a channel high. This right here, the 0.382, as we talked about, Fibonacci's. If you don't know how to use Fibonacci's, they become support resistance. They become almost like trend lines. They become the stop-go lines. What's amazing here is this gap happened, and ultimately at the end of all of this, in all the basing, now this is the 382. Notice how that gap hit it right there. You're hitting it right there. You're hitting it right there. You're hitting it right there. Same kind of mechanics as a trend line. Support, resistance, they are literally the stop-go points for trends to confirm. If gold gets over 170, 140, it should go higher. The probabilities rise that it's going higher because now everybody who sold down here was wrong. Let me look at a few more examples of trend lines. Let's go up to the SPY for the longest time was in this nice long uptrend. And you could see it held it. And then once it broke it, got below it. Really that simple. I know this seems maybe even very simplistic, but that's what you want trading to be. If you can't see it and you have to pretend it's there, then other people can't see it either. And I tell people that all the time. A 12-year-old should be able to look up at a chart and go, I know what you're talking about. Oh, I see this upper trend line. Clear as day. It doesn't need to be hidden because if it's hidden, then no one else is seeing it. It's not that important. So keep that in mind when you're trading. And if you have questions and you're wondering whether something's a trend line, just try to connect to the extreme lows and then see how things rise up or down and see if those angles coincide with points of importance. So, for example, this old QQQ trend line I had connected here the second time, and you would say, well, that doesn't look like the bottom, but notice that's where the actual trend broke. For the whole time we were riding up, nice and nice. Boom. Notice how that line confirmed it. So now I have that line still there. I save trend lines, and sometimes this can get messy and this can get annoying, and you can have a lot of trend lines on charts, but guess what? You can clean them off and move them and get rid of them if needed, but keep it, just know that they're important. The relativity of them changes, but I mean, this is what's funny. So I drew this upper trend line, say on the QQQ back in March of 2021. Notice that on the backside it became support. That's what happens sometimes. The market's got these trend lines that other people see, and if you're not aware of the trends, again, the trend is your friend. If you're missing it out and you don't know, please feel free to hit me up, add a comment. Maybe I can go over a particular stock you're interested in. But I'm here to help you guys learn. And if you're not willing to practice trying to figure these out, it's going to be a real struggle because this does take time. Identifying trend lines is not always as obvious as it looks. But there's many circumstances where these things really matter. And you'll see the more and more you trade that trend lines, channel lines, support equals resistance, those are the things that matter. I mean, here's an example. MicroStrategy, this downtrend, once we hovered around it, once we broke on it, boom, you're going higher. There's so many examples of these kind of things. But again, what is the bottom line importance of them? They're used as road markers for what the trend is going to do. If you would have broken here, this is going much lower. You held, you're going higher. Same thing here. This became the downtrend. You chopped here, it's either going lower or it's going higher. Finding the inflection points is ultimately what you're looking for to make high probability trades. Because if you can identify the inflection points, the action that follow will be consistent 70, 80, even 90% of the time if you can identify this. And whether it's during the intraday or longer term. The longer term ones are even more powerful. That's what I tell people. The longer the time that passes, the more powerful a break of a trend line or support resistance is. Again, I hope this helps. I'm trying to make this series very simple in the sense of what it is powerful and not very complicated. It needs to be well understood because if you cannot draw these things on your charts, then it's almost like having a map without the directions, and not having references on it. So Dan Max at eXp Realty, aka the trading agent. I really hope this helps. And please feel free to come join us in the Discord room at any point if you have questions. We're always here to help. I appreciate everybody, and I will look forward to the next one. Take care.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.